Hi folks, we're back again. Of course, my name is Owen McCafferty, and with me is the distinguished and always savant Dr. David Tack. And we're continuing in our discussion about the professional fusion style practice. And we've talked in a variety of areas about it. But one of the things that we haven't yet talked about is what's the ideal candidate to come into a fusion practice, because many are called, but few are chosen. And we have to make sure that the right type of practice is coming into fusion. And it's not just everybody, and it's not necessarily best for everybody. So I'd like to use the next 15 minutes or so just to have a discussion with Dr. Tack based on our mutual experiences in multiple practice groups as to what the ideal candidate would be and what the nuances are, because there's perspectives that relate to it.
So, Owen, in veterinary medicine, it seems like it'd be 3 veterinarian practice, but are you also looking at, you could have a 3 veterinarian practice and their gross income isn't that good, so is there a happy mix where you have so much per veterinarian, and what is that cutoff, and what are those things that you look at in those practices?
Okay, let's talk about that. So the first thing that I would say is the main objective is to select practices that are safe, practices that have duplicity of professional and support staff. Is becoming now more an issue than it ever has in the past. There are shortages in all professions: accounting, veterinary medicine, the human elements in dermatology and dentistry, radiology, plastic surgery. It seems like everybody's saying, I need more people. And the problem is that it's not even an issue of the number of people, but the number of man hours. So we're looking for practices, Dave, that are going to be safe, that aren't fragile. Usually that means multi-doctor practices have some depth.
Right.
And it's that depth that allows the safety to occur.
So in the case of dental practices, I'm familiar with veterinary practices. Are you looking at 2 doctor practice, 3 doctor practice, like we are in veterinary medicine, or is that a little bit different?
No, it's exactly the same. 3 would be better than 2, 4 would be better than 3. Again, it's the issue of safety. And what specific areas of safety could you think?
From the group or groups I've been involved with, some of the issues that came up were the liabilities that some of these practices had. The liabilities and the way they handled the money in the practice. Were they buying stuff outside the practice and the practice is writing it off, which would be a crazy thing to do if you're getting your practice evaluated to come into fusion, or if you're looking at selling it, because you've just decreased the price of your practice. And what kind of liabilities do you have? Because as a fusion practice, those liabilities would stay with you personally. They wouldn't come into fusion and put the others at risk. That's what comes to the top of my head right now.
No, I think it's very, very good. Remember we had a whole podcast, maybe you've had a chance to see it, maybe you haven't, on only the honest need applied. And what Dave is making reference to is if you have people that are spendthrifts that are doing things maybe not necessarily correct. And I'll tell you, blowing through personal expenses into a practice is clearly and distinctly not correct. But that would be a liability, and that type of person and the people within that practice group are probably not good candidates for fusion practices. And the reason is there's one specific tax return, Form 1065, that is signed by a general partner, and all partners then will receive a K1. So if there's monkey shines going on, in the words of my mother, it's not going to be good for anyone. So you're right, as in terms of candidates.
Well, the other thing that comes to mind is really as an individual, if somebody is listening to this, are they looking at this as an exit strategy right now? And if they are, this wouldn't be for them. I think earlier you said, you'd be looking at 6 years of trying to grow this, and for a person that wanted to continue practice forever, they could do it with the way Fusion is set up. If they wanted to get out, maybe you could address that. Or we're really not looking for people to get out right away.
Right.
That they get in, they get out, and then they're done.
Excellent point. Fusion is not designed for those that want to enter, brush up their practice, and get out. Part of the reason is that it's going to take a while to take advantage of all of the synergies of income, cost, and expense. And the second issue is that those practices that come in and go out are going to receive a significantly lower value than the long-term practice. Because if you remember in one of my past webcasts, we talked about the in situ value that relates to the enterprise and the value that relates to the specific practice. The specific practice has a value based on intrinsic worth, or what's occurring today is they're getting a little bit better than intrinsic worth because the private equity folks are putting a lot of money in large entities that are going out and trying to buy up at a multiple that's higher than what a normal transaction between two professionals would be. And the reason why they can do it is arbitrage. They can then make more money when they flip it to a bigger private equity group. They call it recapitalization, but basically it's buying for a penny and selling for two. That type of person is not designed for coming into practice Fusion because they're somewhat of a carpetbagger. They're in for a short time and they're out. Mm-hmm. This isn't designed for that. This is for people, great people, honest people who want to come into a practice situation, really improve what they're doing, really enjoy what they're doing. And you don't have to do it on a full-time basis, but to be engaged in the practice. I think that's probably the most important thing.
Engaged in the practice, but also with the idea of if they're engaged in their practice, they're growing the practice, then if you have a whole group of people doing that, then the whole entity in and of itself becomes a bigger organization. It's worth more. Again, we're not talking about flipping this or selling it, but if what would happen if somebody got into this and a principal passed away? I mean, how does the Fusion group handle that?
Great question. If I have an individual who's in the group and would pass away, the first people that would have crack at the units, if they chose to sell them, if the estate chose to sell them, would be the doctors acting in their practice. And that's only just. They would have the chance to acquire the units, and they would be dealing directly with the estate. Now, the estate would have a step up in basis to fair market value. There'd be, I hate to say it, but the death of a limited liability company member is going to be a happy tax event for those that survive. But there's other options too, because we've designed the Fusion general practice groups to be holding assets and separate entities being able to direct the medical and surgical needs of the clinicians and support staff. Individuals who are not licensed in that profession, or maybe licensed in the profession but not in that state, can still own those units. So it's not, when you die, it's not necessary that the estate or the subsequent beneficiaries from the estate vend the asset. They could still hold it. And the yield is really great. When you look at a classic practice, a professional practice, and of course they all have different variances, even within what we're using as an example in veterinary medicine. Excuse me. The profit margin varies, but let's say a practice with an EBITDA of about 18% would then have a yield in terms of cash distributed probably around 14-15%. That's cash distributed, and that cash is a phenomenal yield because that's only the current income yield, Dave. The appreciation of the underlying asset is the other factor. That's why everybody wants to acquire these targeted specific practice groups in veterinary medicine and dermatology and dentistry.
I think the reason I asked the question, and you went into it into great detail, was, and it was the reason I got into the first group that I was involved with, was what happens if I die and what happens to that practice? Is my family going to be taken care of, or is my family going to be taking a haircut? And the answer would have been, on, again, a one-off clinic, they would have taken a haircut. But it being involved in the group we're in, my wife would have continued to get distributions from the group. And another thing that maybe we could talk about maybe another time is if you have real estate, this organization or Fusion doesn't buy the real estate, so the practitioner holds on to the real estate. Their family is still getting rent from the organization, and it's just a lot safer proposition to be involved with a greater number of people to protect those assets that you have.
Exactly, and we've talked with, in fact, we had lunch with someone a couple days ago here in Las Vegas, and they form groups and they vend them. The real estate per se, there's a couple options that are available. One of which is that the real estate can be aggregated and sold in a real estate investment trust. As Dave said, it could be held, which I would strongly recommend, by the practice heirs that have title to it, or it could be sold. And this is something that we talked about at lunch that maybe just we want to throw out. It's far better to sell your real estate and hold on to your practice if you need cash. And the reason for that is that the capitalization feature in real estate is significantly less than the capitalization factor in your practice. Your practice cap rate at 16 times in veterinary medicine. Depends on where the market is and what's going on and how desperate you are to sell and the configuration of your practice.
So if you had, let's say you had a really big practice and I could see an individual saying, well, I really don't need to be a part of a bigger organization because I'm already big. Those bigger practices, what are the cap rates they're getting as a one-off sale of a big practice?
They'll be probably at the higher end, maybe 14, maybe 15 times. In some frenzies, feeding frenzies, right before our capitalization event, some of the private equity groups will be offering 20 times. Depends on how big. Now, if you got a practice that's doing 30, 40 million, then you're unique. And there's probably some strategic value that would exist. But most practices are not at that level. And even the $20 million practice brought into a Fusion partnership group and then going into an event together would have a far better result as part of the Fusion group, where the cap rate would be significantly higher. And I'm hesitant to even mention it, but it would be higher than even the best because you're vending a going concern, a business. For that reason, it's become a very attractive option. And Dave, at the time, in one of the groups that always will go nameless, we received the highest multiple ever, even of the very large transactional recapitalizations of the private equity groups.
Yeah, it was it was mind blowing. I never thought in a million years, and it's just because we got together as a group, we got along together as a group. There were a lot of things that trials and tribulations, and really a lot of problems that we had at that time are now problems that are taken care of and would not be a problem in the fusion groups. And it was the best thing I've ever done business-wise, by far.
So this is part one, and as you can see, we're getting at and maybe a little bit above the old 15-minute mark, and we're going to continue this with part two. So thank you for joining us, and please come back for part two in this narrative of who would be a good candidate to come into a professional fusion partnership. Thank you very much.